everybody. Welcome to Monday Market Must-Knows. My name is Merlin Rothfeld, and here are three things that you should be paying attention to this week. We'll start it off with the consumption side of things. Retail sales numbers come out on Wednesday. Now, why is this important? Well, everything you see on this chart in black is positive. Anything down in that white area is negative. And you can see for the most part, we stuck right around that zero line. If you go back to 2008, you see some small little blips down into that negative area. And remember, that was the financial crisis. Well, what we want to focus on now is what's happened because of COVID on the right-hand side of your chart. We zoom in a little bit and you can see there's been some massive swings out there. Now that little bronze line represents expectations. The blue bar actually represents the reality, the real number that came out. So as you can see back in February and March, we were exceeding expectations to the south side. Massive, massive pullbacks in the amount of retail sales. And of course, as a consumption economy, we need retail sales to be positive for our economy to grow. All of a sudden, that pendulum swung to the upside, and we see 3 months in a row of nice positive growth. However, those blue bars are shrinking. The most recent data we had, the expectation was supposed to be 2%. We came out at 1.2%, so we're now actually below expectations. This begs the question, what's next? Are we going to revert to the mean and stick right around zero, as we historically do, just slightly positive and have small retail sales growth? Or could this be the next pendulum swing to the south side, where we start to see a contraction in retail sales? It'll be interesting, especially as we go into November and December, historically great consumption months. But right now, expectations are that we're going to come out right around that zero mark for retail sales. All right, our number two to pay attention to is the FOMC statement, the Federal Open Market Committee. That's Jerome Powell and his team, basically telling us what we want to look at with regards to interest rates. Now, of course, that announcement is going to be pretty clear-cut. It's going to happen 25 basis points. They've telegraphed it. They've said that's what they're going to do. There shouldn't be any surprises there. Well, that announcement comes out at 2 p.m. Eastern Standard Time on Wednesday the 16th, so pay attention to that. And it's not just that number. The number really doesn't mean anything. What is important here is what they say at the press conference. That should happen about 30 minutes after that initial release, where Jerome Powell will stand on a microphone stand and say, hey, Kay, let me answer some questions. You never know which way that's going to go. And the question is, what's their policy going forward? Are they going to be more aggressive and raise rates, or are they going to be more aggressive and continue to lower rates? And where do they go? Maybe negative? Tell you what, we get talk about negative rates, and this market's going to go absolutely crazy. Now, that probably won't happen on Wednesday, but you should pay attention to it, because right around 2 p.m. Eastern Standard Time, the markets are going to go nuts. So lighten up your portfolio, be defensive, and be careful. All right, our final one we're going to talk about. We were going to talk about Tesla because of the split, because its massive sell-off, which was great and expected for many of us here at Online Trading Academy, because of a PE ratio of 1,300 is just ridiculous. But we thought, you know what? I don't want to tell you everything that's so vanilla and everybody else is talking about. Today I'm going to show you something that you probably have never looked at, nor do you probably care about until now. We're talking about lumber. That's right, the lumber market. It's a strange one. What we're looking at here is the lumber futures contract for November 2020. As you can see, going back a few months, it's had a stellar run from about 300 all the way up to 825. Now, what's noteworthy here is what's happening now, not just that run up, which of course we could talk about COVID, maybe mills shutting down, and just increased demand because interest rates are so low right now that housing is just booming. Well, what's happened now is interesting. 4 days in a row where we see these massive red candles, and the last one there, the last two are actually lock limit downs, which mean that the market was selling off and hit a floor that it could not go any lower. Okay, I want you guys to get close to your monitors. I want you to get really close to that right-hand side, because this can be hard to see. Now you see a little dash mark, right? It's like a fifth red candle, but it's just a dash mark. That means that the market opened at its dead low and could not move up, not even a penny, because there was so much selling pressure. It's called a lock limit down. Don't see them too often in the equity markets. You see them often in the futures market, especially with commodities. Now the next one, you see another lock limit down the next day. Wow, it just keeps falling. The next day, another lock limit down. The next day, another lock limit down. I mean, you're looking at a significant sell-off in lumber to the tune of about 28% in about a week and a half. Now, what does that mean to you? Well, let's look at it from a trader's perspective and as an investor's perspective. As a trader, had you shorted this near the top, of course, we do not advocate picking tops. I'm just showing you the potential move here. One contract, which would cost you about $6,000 in margin. Lumber futures are $110 per point, and that's a 240-point move in about a week and a half. 240 times 110 puts us right around $26,000. So on a $6,000 investment, that would have been a $26,000 return. Pretty impressive. Of course, you probably wouldn't caught the whole thing, but just giving you an idea of how much commodities can move and the potential there in the futures market. Now let's put on the investor side of things. Strategic investors need to look at this and say, what is this massive sell-off telling me about the markets going forward? How might I be able to capitalize on this or position my portfolio to capitalize on this sell-off? Here's where it gets interesting. We got to think big. That move down tells us a couple different things. Number one is either a reversion to the mean, the normal price of lumber, or it means another thing. Two other things. It could mean that supply all of a sudden is off the charts. They opened up the Amazon rainforest and said, deforest it all, right? Prices are collapsing. Or demand has just been, hey, we're not building. We're backing away from these markets. We're not going to build new homes. New construction might be falling. So we're not sure exactly why it's falling so aggressively, but it might tell us something about the future. So let's go look at the S&P 500 to maybe paint a parallel here. The S&P 500, going back to the financial crisis of 2007, you can see it peaked in about October, right as it started to fall. If I put home builder, and I'm just going to pick Lennar, which is one of the major home builders out there, you'll notice that their price chart was selling off long before the equity markets. It's the same thing for Lennar, Toll Brothers, KB Homes, or you could even pull up XHB, which is the home builder index. That started selling off about 18 months before the equity markets. What did they know? Remember, these guys that work for Lennar, Toll Brothers, and KB Homes, all are brilliant minds. They're forecasting all the time about this market, real estate markets, consumption, and growth. Well, what would this look like if I put up lumber? Would lumber maybe be a leading indicator for the home builders? I would think so. Here's the chart of lumber over that same period of time. You'll notice that about 8 months before, 6 to 8 months before, lumber was already starting to sell off. So this got me thinking, is this massive sell-off we've seen over the past couple of weeks in lumber a foreshadowing of what's to come? Right now we're seeing record home sales, record new home construction. So the housing market is booming. And we also have very, very cheap mortgage rates right now. I've never seen a 30-year fixed under 3% in my lifetime, nor has my father, who's a real estate agent for over 40 years. That's a rare thing to see. Those cheap numbers could continue to fuel these markets forward. However, we cannot ignore a massive sell-off like this in lumber because it makes you think, is demand starting to wane with regards to lumber consumption? From a strategic investor perspective, it's something to think about. And it might take a couple years to play out, just like it did back in 2004, 5, 6, 7, and 8 on those charts I just showed you. That'll do it for Monday Market Must-Knows, everybody. I'll see you next time.